Welcome to the Anchor Your Retirement podcast. I'm your host, Barbara Gullen, on this roller coaster of a week in the stock market with my co-host, Tony Shore. How you doing, Tony?
Well, I'm doing great, Barb, and we were trying to think of what we could possibly call today's episode. I know you wanted to come up with a great name, and I love what you came up with. Markets and tariffs and interest rates. Oh my.
Well, if the shoe fits. But let's talk about another roller coaster. And
Dorothy's slipper, if it fits.
Let's talk about the weather roller coaster first.
Okay. Yes.
You guys got snow. And then we're going
We
to
did.
talk about how amazingly everybody in the AL Central is tied for first place at this moment.
Crazy, isn't it?
I know, especially since they all have losing records.
Terrible records.
The season is young.
The Twins are terrible. Oh, I just cannot believe it. Anyway, my Twinkies, but I mean they've still got what a couple hundred games left, so
160.
Yeah, exactly.
They play 168. They've played 6, so 162.
Little too early.
It is.
To tell. Yeah,
it
yeah,
is.
yeah. Let's not get ahead of ourselves
today.
Oh yeah, I could have worn mine too.
Yeah,
I have a Royals cap I could have worn,
and I have a Twins cap.
There you go. Yep.
All right, but let's get back to the big. This elephant isn't even pink.
It's red.
I've read very.
If you look at the stock tickers, they're all red.
Except Microsoft was up today.
I noticed that. Yeah, Microsoft, I think, was up at one point yesterday. It was like green, and I'm like, whoa, Microsoft of all things. It is always funny when the market is there's a sell-off like there's going on right now that, not every stock is dropping, right?
No.
Even when the market's down, if the market goes down 20%, there are some stocks out there. But what's crazy is when the market's dropping like this, the big stocks, what they call the Magnificent Seven, those are all down typically.
But Microsoft is in that Magnificent.
I know. That's what's crazy. Yeah, that is kind of crazy.
I mean, we at the time we're recording this, which is about halfway through the trading day on Friday.
Yeah.
The market has lost about 6% of its value. The S&P 500 has lost probably over 6% of its value in the last 48 hours.
Yeah, I mean, the CNBC headline this morning, Dow drops 1,300 points, NASDAQ set to close in bear market as the tariff sell-off worsens.
Right.
And yeah, I think it's going to go down even more. Conventional wisdom says it probably will. We don't know. Nobody has a crystal ball, but we think that's what will happen, right?
No, and for those of you that are working right now, remember that this is like an amazing Nordstrom's red tag sale, which I know doesn't exist.
Stocks are on sale right now. If you've got some
really on sale
cash sitting on the sidelines or any money to put in, you want to buy low. Now is not the time to panic and sell, though, right, Barb?
Right. And what I want my clients and other people who work with fee-based advisors to understand is that if we're telling you to stay the course, remember that it affects our compensation as well. And, up until maybe 3 or 4 days ago, and even still, I think that we have some sound fundamentals in our economy. However, the longer these tariffs are prolonged, the greater the likelihood that we're going to go into a recession. JP Morgan upped their odds of us going into a recession to 60% this morning. It's been a while since we've had a recession in the economy.
Right.
And, typically before we get into a trading war, there's usually some sort of tax cut passed or some sort of incentive so that the consumer and business know that they're getting a break ahead of the curve to kind of buffet these higher costs that we're going to be incurring. That didn't happen this time.
Right. And a lot of people, that's the biggest thing that surprises me, because I think one of the more popular things that Trump across the board that Trump actually did that helped, both Republicans and Democrats and all sorts of folks out there is the Tax Cuts and Jobs Act.
Which ironically is going to be sunsetting at the end of this year.
It's set to sunset, and
Right.
Trump said that they're going to, the rumor says that the Trump administration and the Senate will either extend it or make it permanent even. But why didn't they lead with that? If they're going to do that, you would have thought they would have done that first, then the tariffs.
I think they would have had a better argument for getting it in place first, and that we would be absorbing these tariffs a little bit better than we are now.
Yeah. Yep. Out of the gate with the tariffs surprised a lot of people on both sides. This isn't a partisan discussion. This is just, this is what this administration wants to do.
This is an executive order. We don't have Congress participating in this.
Right.
And while I can understand Trump's idea that he wants to bring more manufacturing back to the United States.
Right.
And I support that idea overall.
Yeah, and I think everybody supports him with China. I mean,
right,
because that's where a lot of our manufacturing went. I think he's got full support on tariffs for China on both sides of the aisle and across the country. But my problem, Barb, is, Canada, really? I mean, why did he make in Mexico? Mexico.
We get a substantial amount of our produce from Mexico. I understand that he is probably doing that as leverage to increase border security, to make the southern border a little less porous. Yeah. But again, all this is going to do is hurt the consumer.
Yeah, at what cost?
In the short term, for sure.
At what cost? So it is interesting. I mean, a lot of the economists out there, are saying, no, this isn't great. But, I get the long term. Hey, he said, well, they're putting tariffs on our goods. Why not us? But that's not even the formula that they used. It's not
agreed.
It's not tariff percentage versus tariff percentage. What they did to figure out how much the tariffs would be is looked at the trade imbalance. Like, well, the U.S. buys way more from China and Europe than they buy from us. So I want to balance that out. Well, we're a consumer-driven country. I don't know how you're going to balance that out. That's going to be...
And when we talk about bringing manufacturing back into the United States, there's two things that we have a shortage of at the moment that will make that a slower process. The first is skilled labor for workers. Construction.
Yep.
The second thing that most people don't think about is that we don't have a power grid that can sustain moving all of that manufacturing back to the United States.
Right.
And we have a significant amount of infrastructure that needs to be overhauled before that becomes a long-term viable solution. Mm-hmm. So, and again, this is mostly my opinion. I've done some reading. We've all done some reading. And, while for now the bones of our economy are still fairly solid.
Sure.
It will not take long, because the longer these tariffs are in place, with prices going up, the greater the likelihood that we're going to be in an inflation cycle again, which is what the Fed has been raised interest rates so substantially against a couple of years ago. And, we're recording this a week in advance. Who knows what this is going to look like by the time this show airs? Okay.
Right. Things could change between now.
My secret hope is that this show is irrelevant in a week, because the global powers that be blinked. And we all came to a decision on what was going to be an equitable trade balance. And, we're recovering some of what we've seen disappear over the last few days. Highly unlikely, but from my lips to God's ears, if we could make that happen, that would be awesome. Today, President Trump is imploring on the Fed Chairman Powell to reduce interest rates, which is counterintuitive to what one does in an inflationary environment.
Yeah, yeah, and I mean the Fed. One of the headlines today was Powell making some statements, and he said the Trump tariffs were much larger than expected, and
Mhm.
therefore inflation is likely to pick up because of Trump's trade war, and that's what Powell, the Federal
Mhm.
Reserve chair, said as the markets continued to fall today. He just made that statement. So it is interesting in what's going on there.
And I mean, we are well into correction territory for the S&P 500 for sure. I mean,
Yeah,
we've
the
been down.
Nasdaq. Yeah,
Yeah, debt Nasdaq is in bear territory.
yeah, bear.
Um,
Yeah, yeah.
and S&P, I think, is still in correction. I don't think
Yep.
we've gotten into bear
No,
territory yet.
no.
And the Dow, which is only 30 stocks. So, the Dow is not my go-to when I'm looking at everything. I'm looking more at the S&P 500 because that's 500 different companies. Gives us a much broader view of the market overall. And the Dow, I think, is in correction territory, maybe because the Dow had gotten so high. 1,000-point swing on the Dow doesn't mean we're in correction territory.
Right.
So, it's been what we're seeing here is very unprecedented. I wouldn't say it's completely unexpected with what President Trump campaigned on,
Right.
but I do think he's moving a lot faster than a lot of people assumed he would.
Yeah, yeah. I mean, it's the old. We're hearing a lot from both sides, from
Mhm.
a lot of Republicans as well, but especially Democrats and the media saying they went in with a chainsaw when they should have went in with a scalpel.
Precisely.
Take it slower, take it easier. But this was a lot at
Mhm.
once. It's just like Powell said. So, but regardless of the politics of the situation, the fundamentals are still in place, and you still need to be wise and make good financial decisions for you personally. Our listeners and viewers,
Right.
Barbara, saying, "What about me personally?"
Right, and this is
So,
why we recommend balancing your risk in line with what your current risk tolerance is,
sure.
but also understanding that if you put all of your eggs figuratively in a stock market basket, you run the likelihood of a correction like this really impacting your portfolio in the short term.
Hmm.
While you're working, it's not as serious as when you're retired.
Right. Yeah, that's true. And so, that balance is so important.
Mhm.
And, this just illustrates it. But if you're the type of person who sees this news that, oh, they float the word recession, well, they're
Mhm.
always going to say the sky is falling. That doesn't mean it is or is going
Right.
to. Nobody has a crystal ball. But even with the volatility we're seeing right now, or if we head into a bear market, if that makes you panic, if you're listening out there and
Mhm.
you hear this news and you want to sell, or you're worried, then you might have a medium or low risk tolerance, and so you need to make sure you're properly allocated. I would
Mhm.
recommend that our listeners set up a no charge, no obligation consultation with you,
Right.
and see where they're at. Get a second opinion on where you're at. Get some reports
Mhm.
run, and figure out what you have, a questionnaire that can help figure out risk tolerance. You have a report that you can run on their accounts to show them where they're at, so they get a good idea and how that can help meet their goals, or what changes they might need to make to meet their goals.
Right. I mean, like we said, for those that are still working and that have a longer time horizon, this could turn out to be a really good buying opportunity in a market that has been very, very heated the last couple of years.
Yeah. Yeah, it really has.
Yes. And what I want to remind all of our listeners of, this is Maya Angelou. I might be misquoting a couple of words, but every storm runs out of rain.
Yeah,
So,
it
you know,
does eventually. And the
and
markets always go up and hit record highs after they
they do.
have these downturns, right?
And I understand that, figuratively, we are in a downpour at the moment. But now isn't the time to make an impulsive decision. Now is the
Right.
time to get in touch with your advisor. Schedule a meeting if you haven't met with them in a while. You know, take a deep breath and understand that this is temporary. Now, if you are pulling out of your assets, if you're already retired, hopefully you are a little bit more balanced. Hopefully your advisor is looking at things for where they are in the market right now and managing those expectations and perhaps giving an investment account a chance to take a breather and recover and pulling those assets that you need on a monthly basis from another source. And if you want to explore those options, you can always call our office at area code 913-553-6222. And you can go to our website, bgwealthmanagement.com, or I think anchoryourretirement.com takes us right to the contact us page where they can reach out to schedule that complimentary consultation.
Yeah. Well, and I think that's great, Barb. And so basically, the key is have a plan, a written financial plan, an investment
Mhm.
plan for your investments, for your retirement income, your retirement
Yes.
accounts. And
Yes.
that's what a lot of people are worried about, their 401ks, their
Mhm.
IRAs. And that's what you help your clients do. Your clients can sleep well at night, even with the market volatility, because they have this plan and it's right for where they're at, right?
Right. That's, it's our job. And, many of us utilize great third party money managers, like our partners with Gradient Investments. I'm sure we'll be hearing from them in the next day or two, and they're trying to take a broad based look at what's going on and will offer guidance that we'll be able to push out to our clients in the near future. All I can tell you is that this is why I tell my clients it's better to plan for a crisis rather than in one.
Right. There you go. There you go. Yeah, it's better to be prepared ahead of time.
Mhm.
But still, when there's a crisis, you can still answer questions and maybe help them make some important moves to protect against the future or where we might be headed, correct?
Yes, yes. And now my crystal ball broke a long time ago,
Yep.
shortly before I got my first set of licenses, I think.
Sure.
Um, we know that over time, the market trends positive. I have been warning my clients for a while that with 2 years of back to back returns over 20%, we were overdue for some correction. We
Yep.
were overdue for some cooling in the market. I could not have predicted that this was going to be the catalyst for it. But I think that a lot of institutional investors who have seen this run up in the market are using this to capitalize on some profit taking,
Yeah,
which
exactly.
is just exacerbating the problem. And I'm going to
It
go back
is.
to what I told everybody during the pandemic 5 years ago when we saw sell offs like this. Most of the trades, and by most of the trades, I mean north of 95% of the trades right now, excuse me, going on in the stock markets are automated. They are
Right.
bots that simply have the if thens plugged in. If it hits this price, buy. If it hits this price, sell. You do not overall have people who are, you don't have the logic of a human being sitting behind the ticker.
Right.
And I would imagine with the emergence of artificial intelligence over the last couple of years, that automation is just that much more robust, but that we are dealing with computers doing a lot of the decision making right
Yeah.
now.
Yeah. Yep, that's just the way it works these days, and
It
so
is.
you have to take that into consideration. I'm glad you made that point. Well, Barb, before we go, one more time, let our listeners and viewers out there know how they can get a hold of you and set up that consultation.
They can call area code 913-553 6222 and choose the option for appointments and scheduling. I think it's option number 4. Or you can always go to our website, bgwealthmanagement.com. We are here to help in any way that we can and offer sometimes just a shoulder to cry on and an ear to listen. And perhaps some reassurance that we're going to be okay.
All right. Well, that's great. And Barb, I know you've helped so many people in the community with this, your clients and people you talk to. This is great. Some good information. Again, the message, don't panic. Give Barb a call, 913-553-6222. And that does it for today's episode of Anchor Your Retirement with our host, Barb Gullen.
We'll see you soon.